Festive season's greetings and more importantly health, wealth and prosperity. A check on the markets. The Nifty is doing fairly well. Actually, we have seen a sharp fall in the Nifty Bank right now. So sudden decline. We're at the low point of the day. A couple of these Nifty Bank heavyweights should come up for you. The likes of HDFC Bank, perhaps. Let's see whether that one's the one which is causing the decline. Or ICICI Bank, also concomitantly pull up. Yeah, that's the one. The highest weight on the Nifty Bank at the low point of the day. We have HDFC Bank. ICICI Bank is off the highs of the day, but the sharp fall in the Nifty as well as the Nifty Bank is primarily on account of HDFC Bank. The Nifty is virtually breaking into the red as we speak. So there is a sharp fall. Any other heavyweights that are seeing a sharp fall, Sumera, as we speak?
Yeah, actually, pretty much everything looks to be giving up quite a bit. And prime amongst them is the fall that we're seeing in Adani Ports. There's also Indiabulls Housing Finance, which is now down just 1%. But look at the way that stock would have come off. There's Titan. There's, in fact, quite a few biggies as well. To look at HDFC Bank, it's moved into the red now. And a lot of that fall has come off late. Not just that, we're seeing Bajaj Finserv shave off some gains. Kotak Mahindra Bank is about to move into the red, it looks like. Even something like L&T, which is moving with strength, is giving up some of its gains. HUL is another one. It's now down 0.8%, but a lot of that selling has come through of late. And of course, something like a Vedanta continues to get hit. So now down about 7-odd%. Another big loser remains Cipla. So that's a 6% gone on that one.
Absolutely. And looks like perhaps, the sell-off is also mirrored in the European markets as we speak. All the European indices are at the low point of the day. The FTSE is given up about 0.4% from the highs. We have the German index as well as the French indices, both of them slipping into the lows. The German index is barely in the green right now, just about 6 points odd. So yes, there is a sell-off. The Dow futures indicates no problem actually, just about a 12-point decline. So it'll be very interesting to see what it is that is causing this decline. But the mid-cap index too has taken a sharper knock right now. We have the advanced decline ratio. Those lines should come up for you firmly split right down the middle, about the 1,000 stocks which are in the green, which compares with about 1,000 stocks in the red. So those lines should come up for you. Through the day, they were, the green line was far apart above the red one. Now they have converged as we speak. It is a sharp fall. Let's see what happens. First up, all the top stories that we're tracking this afternoon. Market witnesses a sharp fall as we speak. Was trading in a narrow range on the last day of summer 2074. The Nifty right now up about 4% this summer. The mid caps as well as the small caps see a lot of the pain in the year gone by.
PSU banks rule the roost, but SBI falls despite good numbers. Management tells CNBC TV18 they will recover 6,000 crores from SR Steel resolution.
NBFCs, they gain on a hope of liquidity boost coming in from the RBI, but Indiabulls Housing Finance falls despite raising money. The company issues long-term bonds worth 1,500 crore rupees, including 10-year money, and announces commercial paper buyback of all papers maturing till November 30th.
Tata Motors gets a boost after JLR UK October sales see a jump of over 40%. NMDC, though, is under pressure despite the lease deed for the Donamalai mine getting renewed for 20 years.
Former RBI Governor Rajan likens the RBI to a seatbelt which helps avoid bad accidents. Says the government may push for the RBI to be lenient on many issues, but the central bank must have the right to say no.
All right, those are our top stories. But this Diwali, you don't have to worry about which funds you should be picking, where you should be putting your money. The fund managers have actually done a lot of hard work through the year. It's been a tough year for all fund managers. And we have three experts, Manoj Nagpal, Firoz Aziz and Costa Belapurkar, who've done the job for you by hand-picking 12 mutual fund ideas this Diwali.
One of the top picks that I advise people to look at is the ICICI Pru Blue Chip Fund. This is a large cap fund, manages volatility very significantly. In the last 10 years, 9 years, it has outperformed the markets and created alpha. The style of the management of the fund has now been distinctly identified. There is significant overlook on it by Shankar Naren, though he is not the fund manager now. He was the fund manager of this fund till last month, but now it has changed. However, the value of the fund still remains the core. So that, if you're looking a large cap fund, will be a core holding, should be a core holding of the mutual fund portfolio for a retail investor to begin with.
It's largely a multi-cap fund with a huge focus towards large cap. Nilesh Surana is the fund manager, and he's done a great job from 2014 when he took it over. I think his style is bottom-up stock picking, and I think that's very crucial. Running any fund, especially a multi-cap fund, you need to be more bottom-up. That's one. And I think he has been able to keep the risks limited and have been able to deliver returns, risk-adjusted returns significantly. They have about 67 stocks, 86% in large cap, 12% in mid cap. I think that will be my pick.
It's a name that's kind of fallen off the charts for a lot of people, the HDFC Top 100 Fund, right? It was a very popular fund to start with, but over the last few years, it's kind of taken a little bit of a volatile ride. And let me explain what's really been happening, right? So if I look at the strategy of the fund, it's fairly simple. As Prashant, who manages the fund, calls it growth at a reasonable price. In a space, like a large cap fund, he would definitely be one of my top picks as a manager.
Next fund that I will put on the table is the Kotak Contra Fund. It's managed by Deepak Gupta. The reason we are putting this fund on the table is that it was earlier known as the Kotak Classic Equity Fund. However, the way if you analyze the markets at this point of time, the rally has been led by PE expansion. Now the PEs have expanded to a level where further PE expansion is now difficult. So the next 5 years are really going to see earnings growth, and those stocks which are driving the earnings growth, those kind of funds will outperform the generic funds. A Kotak Contra Fund plays on this psychology, identifies value bets, at the same point of time keeps it fairly diversified, and their track record in the last 5, 6, 7 years has been impeccable.
In the large cap side, because the stocks you're holding are reasonably stable, focusing on fewer stocks definitely gets you that alpha, and can still keep risks significantly limited. In that category, my favorite pick would be the ICICI Focused Equity Fund, managed by a very stable fund manager who's been doing fund management for about 10 years now. Mrinal Singh manages that fund with just 12 stocks. On the large cap side, that's the most concentrated equity portfolio you will find in the mutual fund category. I think this will be the fund, to my mind, I would bet my money on.
The Birla Frontline Equity Fund. Mahesh has been managing this fund for over a decade now, and if I look at the way that he really manages this strategy, he's looking at it from a sectoral level, kind of mimicking the benchmark. But stock selection is really where the key to the strategy lies, where he can takes those stock calls within benchmark names and some of the off-benchmark names where he can really add a lot of alpha. Mahesh brings the execution capabilities to the table, and there's something that we should definitely want to look at from investors' perspective.
One of the themes we believe will play out in the next 5 to 7 years is the infra theme. Infra has been a bad name for the last 10 years now. Most of the funds have underperformed the markets. At this point of time, we see a great revival happening in the government spending, which has already happened in the last 3 years, and private capex is starting to come in. We feel that, and the signs of recovery are now clearly visible in each of them. So our top fund here is the IDFC Infra Fund. However, it's only for a person who wants to take that higher beta risk into the portfolio, wants to, add an incremental alpha, and understands that this may or may not play out, and there's a probability thing. So if you're keen on all these things, a high risk taker, IDFC Infra Fund could be a good bet to put in your portfolio.
27 stock portfolio, which is called SBI Focused Equity. R. Srinivasan is the fund manager, and I think he has, over the last 8 years, 9 years in SBI, created a niche for himself in terms of stock picking. And I think concentration with a fund manager has shown and picked up stocks much ahead of the curve is a very good strategy. So there's so much value which has emerged. That's where a SBI Focused Equity Fund has 27 stocks, largely pharmaceutical stocks that supported him, and has about 40% of these 27 stocks in the large cap category. So you get a mix of large and mid, largely focused towards mid cap, but I think this fund has the potential to outperform both the large and the mid cap indices by about 4-5% a year.
The Franklin Prima Fund. Now, if I look at the strategy again, one of the clear focuses when Janki and the team at Franklin are really looking to identify stocks is look at quality businesses and look at good corporate governance practices, because that becomes even more paramount in a capitalization space that he's operating in. There are spurts in the market where there's momentum at work. This fund could potentially lag, but in a long run or a good market cycle, this fund should do exceedingly well. Just that quality focus is going to drive home the returns for this manager.
one should diversify not only across various styles, large cap, mid caps, but also across geographies. So our last pick comes across here, and we recommend the Franklin India US Opportunities Fund. As the name suggests, this is 100% invested into the US markets. It's a $4 billion fund managed out of the US by Grant Bowers. It has stocks which are like Amazon, Apple, Google, Microsoft, MasterCard, Visa, all the things that we use in a day-to-day life. And this fund has given a return of almost 18% CAGR over the last 10 years plus. We recommend the Franklin US Opportunities Fund because of its strong pedigree, long track record, and a portfolio which is fairly well diversified.
I would go the mid-cap way, and I would say Kotak Emerging Equities, which is managed by Pankaj Tibrewal, 3,000 crore fund, well diversified, but largely focused on mid-cap stocks, is a good fund. Because if you evaluate a fund manager on the mid-cap space by the capability of decision making, and if you see the last 50 decisions done by Pankaj Tibrewal, to see how many went right and how many went wrong, which we call right to wrong ratio, that I think is phenomenal when it comes to this gentleman. So I think the fund manager's job every day is to buy and sell. So if he's taking decisions, you can go to the root cause of the performance, and rather than analyze the effect, you analyze the cause. And then you know that the future performance might sustain if the capability is favoring you.
We find space for a value strategy within the investor's portfolio to sort of complement the growth styles which a lot of managers run. And the clear case in point is what happened through 2018, right? 2017 was a very bad year for this fund because this strategy wasn't really, it was the market cycle which didn't really work. But 2018, classic case in point, where this fund's been doing relatively a lot better as compared to it simply because of its value tilt.
Market, the key indices are in the red now, so the Nifty is getting close to that 10,500 odd mark, and the Sensex is just about barely managing to hold on to the green. The mid-cap index is now down about 0.5%. So I think everybody talks about red at Diwali, and I think the market is now bowing into that. So a bit of red now coming
interesting, Sumaira, pre-Dhanteras, we had a lot of these jewelry stocks. They moved higher. Even the likes of PC Jewelers moved, around 70-80% in just 3 days. And now they are all coming in for profit taking. So PC Jewelers is now down about 11.5% thereabouts. Even Titan reports its numbers on Friday. That one is at the low point of the day.
Yeah, the only thing I can think of is that perhaps people are moving to financial assets and looking at maybe not buying jewelry but gold ETFs. At least that's the hope. All right, ahead of Diwali, my colleagues Sonia and Nimesh caught up with some of the top fund managers, Nilesh Shah, Navneet Munot, Manish Gunwani, almost best in class, to talk about the market, the sentiment, and whether or not the time had come to press the buy button. Hear them out.
I'm avoiding buying gold. More importantly, equities have become cheaper because they haven't given any return last Diwali. It's quite likely that this Diwali they will give better return. So it's time to buy equity rather than gold.
Okay, so there is a Diwali sale, as they're calling it, in the equity markets. Navneet, happy Diwali to you. You were telling us before the show started that this is the best time to be buying, but sentiment has really been punctured. How do you change that?
So that's the best time to buy, right? When sentiments are not good. When sentiments are good, last year at this point in time, we were celebrating implementation of GST, of IBC, of RERA. We were celebrating, I think, the expectation of growth coming back next year, corporate profitability coming back. But because of all of these things, valuations were also high, right? So last Diwali, sentiments were better, but the valuations were high. This time, maybe some of the risks that we thought last year, whether it's from trade war, from global monetary tightening, or the high oil prices, the valuations have come down. And that's why, like Nilesh mentioned, that we are not buying gold. I'm putting more money in equities. In equity mutual fund, specifically SBI mutual fund.
Sonia, happy Diwali. Happy Diwali to all the guests as well. Just to take a point forward, Navneet, you spoke about valuations correcting a bit. But have they come to a decent, like a buy zone right now, or you still feel there is froth? Simply because the earnings have not picked up in the last 4 years. Earnings have been flat, but the valuations have reached almost 21, 22x. Still, there is a room for correction?
So there is a fallacy of average. You put a person in half in a deep freeze and half in oven and say that the average temperature is not worrisome. The same thing with the market. Whether you look at the valuations or you look at earnings growth, it's a very, very similar story. There are pockets where the valuations are high, there are pockets, and I think today those pockets have become large where valuations have become reasonable if you take a slightly longer term view.
Okay. Manish, I was just listening to your video as well, where you spoke about broad outlook for in the near term, and even you believe that it's right time to look at equities as an asset class vis-a-vis the other asset classes. Your take on equity as an asset class, within that, what is your view on the mid cap and small cap, because they are the ones who've corrected sharply?
So I think there are two ways to look at it. In terms of historical attractiveness, I think we're somewhere in between.
Okay.
So rather than take a subjective opinion, if you look at our asset allocation model or other asset allocation models in the industry, everyone is in the middle zone. So I think neither are we in 2009 or 2013 kind of bottom. I don't think we are at 2010 or 2008 kind of top as well. So we're somewhere in the middle. Of course, just to buttress what Navneet was saying, I think there's a fair amount of value, because I think what's interesting is even globally, if you see, 2011 to 17 was broadly a growth style working over value style. But I think over the last few months, we're starting to see, after a fairly long period of time, the value style come back. So if you see, the FANG stocks also have started correcting, whereas the traditional old economy stocks have started doing well globally. So I think there is a trend towards value, and I think over the last 6-7 years, a lot of the asset-based industries, companies which are close to book value, those are quite cheap right now, because they haven't gone anywhere for the last 5-6 years.
Okay. Nilesh, what about you? What's your view? Because a lot of people are drawing parallels to the 2013 kind of scenario. If that is the case, then this is perhaps the best time to be buying stocks. Would you agree with that argument?
So this is the best time to buy the stock, provided we are lucky and we are sensible. We need little bit of luck in terms of oil prices. Oil prices have come down from 80 to 75 and our markets are up 4%. Small cap is up even more. So we need oil to go towards 70 and then to 60. Then this is the best time to buy. We also need to be sensible. There are state elections towards the end of the year. There is mother of all general elections in 2019 mid. Clearly market has priced in a stable government. And if we get a coalition government, then this is not the time to buy equity. But if you are going to get a stable government, then this is the time to buy the equity. So we need to be lucky little bit. We need to be sensible in voting majority.